booms don't end with a bang, they end with a shrug. The regional property surge, driven by lifestyle escapes, low rates, and that great urban exodus, is hitting a wall. Exports are sliding, rural incomes are shrinking, and investors who once fled the cities are now quietly drifting back. But smart money doesn't follow the headlines, it tracks the data, and the data says the tide is turning. We welcome back Nick Tuffley, Chief Economist at ASB. If you've bought outside the cities, if your portfolio leans regional, or if you're wondering where the money's going next, this is the moment to listen.
Financial freedom faster. Financial freedom faster.
One quick thing before we start, Mortgage HQ's Snapshot has helped thousands of Kiwis stop renting, start investing, and see the game clearly. If you want the same clarity, it's waiting in the description. Nick, what's the clearest sign from the latest trade and export data that the regional property boom is losing momentum?
Well, generally what we're seeing is it's quite uniform across the country. We've seen, sales turnover in June generally pulled back a little bit. We've had 2 months where sales turnover has eased back a little bit. And that's sort of fairly uniform. Prices virtually across the board in New Zealand, they are somewhere very close to like a flat annual increase when you're looking over the last year. So we're seeing some surprising sort of line up with most regions. Like the main exception really is Wellington, where you're actually seeing outright price declines over the last year. So that Wellington market is definitely playing to a different tune. And, we all know the stories in Wellington where the government is working hard to try and figure out how it can slow spending growth after years of very rapid growth. And so that's impacting on activity and confidence in that area as well. Still seeing signs that it's probably the South Island is probably doing marginally better than the North Island in terms of, house prices holding up there.
Talk us through cheeseburger inflation.
Well, it's very important in my household. My 2 girls still quite fond of the cheeseburger, so I have to sweat away in the kitchen making it. And look, when you're looking at food price inflation and going through that, I was actually pretty stunned to see that pretty much everything that I put into a cheeseburger is going up in price. And some of it's for reasons which are overall helpful to New Zealand. So look, cheese and beef prices, they're up quite strongly. And there's a lot being written about cheese prices at the moment. But what we've got to remember is what's happening is in export markets, we're seeing really sort of strong prices for our dairy products. So some of our competitor export nations like Europe have seen sort of flatter production over the last year. And so that's contributed when we've seen a bit of growth in global demand. So look, we are paying more for our dairy products, but the reason for that is that we're actually able to get much higher prices for the 95% of the dairy production we have that goes overseas. So it's a good news story on the farm. Similar for beef prices and to some extent lamb prices. They have strengthened. Beef prices in particular are getting pushed up by basically a shortage of red meat in the US. They've had droughts. They've got strong demand for beef, and so that's really pushed up our export prices. So we are seeing a few cracks in our exports to the US, particularly of beef. But look, because we've had such strong export growth, export price growth, that's meaning that we're getting good on-farm returns, but it is filtering through to some of those foods that are near and dear to our hearts. And even things like bread prices, for example, are up. There's a lot of grocery prices that are up. Fresh fruit and veggie prices are, have been lifting by more than what you tend to get at this time of year. There's usually a bit of a pickup in winter because anything that's sort of a summer fruit or veggie that we want is usually either imported or had to be sort of kept in storage for a period as well. So look, cost of living, not quite a crisis, but it's a bit of a crunch, particularly if you're trying to make hamburgers.
And how is this going to impact property prices in rural areas? I was reading about how New Zealand has been converting a lot of these farms that have cows and sheep, and they've been converting them into forestry. So even though there's strong demand for New Zealand meat internationally, there's going to be less of it. What is going to happen long term with these rural property prices given this surge now? Is it going to keep continuing?
Well, the conversion of forestry is being, I think, slowed now that there's been some changes to the emissions trading scheme, which was encouraging a lot of forestry conversions, and also moves to make sure that it's being done mainly on sort of more marginal land, which you can't really run livestock on readily. Look, I think when we step back and have a look at it, we've got some big trends that are going on. Look, we've still got strong demand for our dairy and our beef. There's less focus, though, on expanding herd sizes, more of a focus on efficiency on farm, which is basically getting more milk or meat, out of your paddock in a sense. There is a bit of a shift, which we've seen over a long time in the sheep meat area, where we're actually seeing declining numbers of sheep for decades now, actually. So there is quite a fundamental shift coming through there. But when you step back and have a look at what New Zealand is good at, it's good at growing things very quickly. We've got a good climate, we've got lots of water. So that sort of agriculture, horticulture, we always do have an edge in there. But, that sector's not without challenges with adaptation to climate change, and even the sort of focus on, its role in reducing or containing its own emissions, particularly for methane in the case of livestock.
Is there a pattern in the data pointing to a shift in the buyer demand back towards urban centres, or is it still a rural flight?
At the moment, what we're seeing is particularly when we do our regional scoreboard each quarter, is it's generally provincial New Zealand that's been doing well. Plus Canterbury as a whole, including Christchurch. So your big urban areas like Wellington in particular, and also Auckland, are still finding things quite sluggish. Look, where we are seeing the income growth come in is provincial New Zealand, where you've got dairy, red meat, fruit, places like Queenstown, where you've got strong tourism numbers. And those are the areas where that sort of flow-on effect, particularly as farmers sort of repay a bit of debt, get comfortable with their financial position, and then start going out and spending on the farm, particularly deferred maintenance, you see the money filter out. So we've still got an economy at the moment where the recent growth we have had is very much focused on those export earnings coming through. So we're likely to see this combination of money flowing through from farmers into their communities over time. The urban centres, where the recovery lies in there, it is really around interest rates taking the foot off the throat of homeowners and giving them a bit more spare cash to spend.
Is the coalition government doing enough in the infrastructure spending to stimulate that internal kind of growth and job activity, or is it just all about exports?
Well, the government is working very hard on that whole infrastructure side, but what we've got to remember is it's not something where you can turn the tap on very quickly. It takes a while to get results. They're sort of very focused on getting bang for buck, very focused on getting foreign cash and private cash to also support the infrastructure development. But look, we can't expect an overnight economic miracle out of just trying to lift infrastructure. If we remember back, the Labour government tried to push through what are called shovel-ready projects to try and stimulate the economy back in about 2020. Some of that stuff took a long time to come online, and it came online at a time when the Reserve Bank was trying to discourage everybody else to spend money. So it's not something where you can generally use infrastructure spending as something to get the economy to, suddenly sort of start growing again in the short term. It's more around that sort of long-term addressing our infrastructure needs that's going to help our productivity. So I think that's where the role of infrastructure, encouraging businesses to invest in expansion and productivity improvements and technology uptake, all that's about that longer term picture of making the New Zealand economy grow a bit faster.
And what's the inflationary impact likely to be when it hits the regional landlords? Is it going to impact them more than the urban centres because of things like the supply chain and infrastructure limitations?
Well, infrastructure will generally sort of have impacts on, say, your cost structure of getting goods to market. So any infrastructure that helps move some of our key exports to the ports obviously helps. But what you tend to find is that where you can get some inflation out of infrastructure is, during that construction phase, if it's happening at a time when it's crowding out other needed construction coming through. Now, we'll probably tend to find that the bulk of the sort of high spending infrastructure is more in the urban areas rather than the provincial areas. You will get things like transport related developments coming through, but a lot of the infrastructure needs will tend to be near the urban centres. So that's probably where the direct impacts of any inflation out of construction will come. But longer term, we do need a lot more infrastructure, and it does help move things around quicker and helps us be more productive as well.
In the cost of construction, wage growth is flat, but the materials cost, there's pressure there. I saw an article recently, Carter Hall Harvey trying to push the price of wood up, and then GJ Gardner Homes, New Zealand's largest home builder, basically saying, no, we won't accept that price. Now, if the cost of materials is trending upwards, is that going to push the prices of properties up, or are we able to absorb that and the property prices will still stay flat?
Well, at the moment, what we're seeing that overall the cost of building a new home, the inflation in that area is the lowest that it's been since about 2008 from memory. So whilst there might be some pockets in some areas, overall it's pretty benign. Like, we were getting nearly 20% annual inflation a few years ago. But you will get pockets. I think the thing at the moment, though, is that construction activity, for housing is about a third of what it was at the peak. So it's not an environment where people will necessarily find it very easy to push through cost increases. We're not in that environment that we were a few years ago, where there was a literal shortage of jib board, and you could pretty much name your price for selling it. It's a very different market at the moment, and I think we've seen that in the trend in overall construction cost prices. So yes, whilst we might see some pockets, I'd note, though, that wood is one area where we haven't really seen particularly strong export prices at the moment, because one of our key markets, China, is pretty quiet. But look, it's an environment where it's going to be pretty tough to pass on widespread cost increases in that area.
Appreciate your insights today, Nick Tuffley, Chief Economist, ASB, and look forward to catching up again soon.
Cheers. Thank you.
Now, before we go, you want freedom, not theory, not mindset, moves, tactics, and a playbook? You want the 3 property formula. I've written the strategy real investors use while the rest panic. Built from the trenches, no fluff, no seminars, just results and tons of case studies. If you want to own the blueprint, grab the book and give yourself the unfair advantage 95% will never get. Check the description below.